You can see 26,138, the levels at which the market is trading, 0.5% up on the Nifty and 330 points up on the Sensex as well. 85,593 is the level with Bank Nifty almost up to 60 points. And look at the market breadth is 1588 on the decline side, as well as NSE advanced declines are concerned, 1126 on the advances side. A few counters that we can see buzzing on the Nifty 50 gainers list. It's Bajaj Finance almost 2.5% up. Shriram Finance, Bajaj Finserv, HCL Tech almost up 2%. We can also look at Infosys, Hindalco, SBI Life up almost half to 1%. And HUL, today's biggest loser on the Nifty 50 losers side, almost down 3%. Interglobe Aviation continuously down. Even now we can see it's almost 2.5% down, with Axis Bank, Trent and Sun Pharma, Adani Ports also down almost 1.5%. So that's the buzzing counters in focus as well as market is concerned. But then yes, it's trying to hold steady, and the last trading day of the week as well, it's very crucial to know at what levels the market is ending the week. Definitely we've seen the policy announcement, and the focus will be on the market on the banking front as well. But then let's welcome our guest for today, who will be answering your stock specific queries. And just before I welcome our guest, okay, we are joined by Mr. G. Chokalingam. He's the founder and head of research, economics research. Hi, morning, and welcome to the show. And okay, so we are looking at the markets. Let's get the sense of the trade setup right now. So it's trying to hold 26,100, and how crucial is it to close the week at these levels today, according to you?
It will be very strong. Sensex and Nifty would be very strong. There is no doubt at all. It may not rise substantially because of the rupee weakness, and FI is delaying their inflow. But with the DIA support and also the fundamentals being very strong, and also RBI clearly communicating the signal that the reversal of interest rate cycle would continue, and that is supported by good monsoon, good crop output expected, and low inflation. I am very optimistic. Whether you take the calendar year of 25 or financial year of FY 26, the Sensex Nifty, there is a headroom for further rise, anywhere from 1 to 3-4% by end of this current financial year.
That's about the view on the major indexes, Nifty and Sensex. But let's get started with all the queries then. And our viewers, just in case you haven't sent your queries yet, do remember to send them on the number that's flashing on your screen. Don't forget to mention the stock name, your location, and also the specific stock query that you have, so that we can have them answered by our fundamental and technical experts. Well, for today, let's get started then. And the first query is coming from Bharat, who's written to us from Bengaluru. He says he's a regular viewer of the channel, and thank you so much for that. Well, that really keeps us going. And his stock query today is on Kaynes Tech. He really wants to know what's the current level to enter. Mr. Chokalingam, coming to you, what about Kaynes Tech? You know, we have been seeing a continuous fall in the stock. It's the second day that the stock has been declining today on the back of that Kotak report that came yesterday, which has highlighted some inconsistencies as far as the FY25 disclosure is concerned. But overall, despite that note, do you think we could expect some kind of an upside? And if is it a good time to enter into Kaynes Tech's the current fall? Is it a buy on dips?
One can wait for two reasons. Even after the correction, it is a trailing P is over 80, which is slightly stretched. And second, as you rightly mentioned about certain industry apprehension about the management or the accounts. So there is a room for further 5 to 10% correction, if not more. So I would wait on the sideline and monitor the stock for some more time before taking any firm view on the stock.
All right, so trying to stay put and then be on the sidelines as far as Kaynes Technology is concerned. But then let's get connected with our first viewer as well of the show. Satyajit from Hyderabad is on the phone line. Hi, Satyajit. Morning. How are you?
Good morning. I'm very fine. How about you?
I'm good. Thank you so much. So what's the stock in focus today that you want to ask a question about?
Madam, I am a very long-term investor holding HDFC Axis from the last 7 to 8 years. Okay. And I have queries about 2 or 3 accounts. One is Cohance. I'm holding it since it was the old company. I am running a loss despite holding for 3-4 years.
Sure. Okay.
Second is, I also have a query about Suzlon. I have about 3,000 shares. which are also, I had purchased them at a low level, and after selling, I repurchased, and now I'm running in a loss.
Okay.
And the third one is about
What's your ultimate buying
Jubilant.
price or the average price for Suzlon?
Suzlon, actually, now it is 49, but earlier I think I had purchased it around 25, 30, sold at higher levels, and then repurchased at 52.
Okay, got it. The other stock is?
And finally, Jubilant Pharma.
Okay.
Jubilant Food.
Jubilant
That
Food. Okay.
purchased that 490 level before that split and all that. So that also is lagging beyond. All these three accounts.
Could you repeat the buying price again for this?
It was 490 when that split happened, I think.
Right, got it. Okay. So your outlook is long term. Should I be considering more than 6 months?
Of course. In fact, if it's a good stock, like I said, HDFC Axis, I'm holding it for the last 6 years.
All right, you sound like a seasoned investor in the equity markets, but then thank you so much for sending us your question. And Mr. Chokalingam, how would you like to help him today?
Cohens, I looked at the fundamentals. Last 3 years or 4 years rather, it is not able to show any significant growth, and operating profit is also down. But still, to be fair to the stock has corrected a lot, and P multiple, which is extreme, it used to be extremely stretched, also has come down. So I would give a hold call only for medium to long term investors. And Suzlon, yes, the post is steep correction. I think now Suzlon has started becoming quite attractive for medium to long term, because unlike in solar segment, in wind energy segment, the competitive intensity is relatively much lower. So, and also its recent performance gives a lot of confidence. So one can hold Suzlon. If there is any other dip, one can buy. HDFC Bank, yes, I don't think one can make a lot of wealth, but then at this point in time, when small and mid caps are under severe stress, outside, particularly the stocks which are outside the small and mid cap indices are under tremendous stress. So in this situation, bank like HDFC Bank can become a very large, cap or defensive stock. And also the industry tailwinds are positive. Today we saw the rate cut, and the rate cut would continue. And the industry credit growth is also in double digit continuously. That also would favor a leader like HDFC Bank. So therefore, I would give a strong hold on HDFC Bank.
All right, so strong hold on HDFC Bank, and hope Satyajit's queries were answered. A lot of queries over there. Thank you, Mr. Chokalingam, for that. But on that note, we'll just stop for a very short break. We'll be right back to answer more of your queries on the other side. Hi there, welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanushka Sarkar and Kavita, and you've joined us live from the SBI Live studios. And this is a show where we're taking all your stock-specific queries. So let's get back to them. And we have a live caller joining us now, Mr. Nagabhushanam from Telangana. Hi, sir. Thank you so much for joining us today. How are you? And please tell us, what's your stock query today?
Hi, ma'am. Good morning to all of you.
Good.
My query is, ma'am, I am holding Dixon Technologies of 100 shares at the rate 15,500. So my query is for a 3 months short time term, whether to hold or add or exit, because it has been falling since 15 days continuously. I just want a guidance for that.
Right, got it. So the query is on Dixon Tech. The stock is currently trading around those 13,595 levels. And we also have Kunal Parar, Vice President Technical Research and Algo of Choice Equity Broking, now joining us on the technical. So Kunal, since it's a 3-month query, let me take it with you first. They're already sitting with a loss. They bought it at quite high levels. 15,500 is what I believe. And it's significantly down from that level. So what's your view in the 3-month period? Where do you see the stock going from here on?
Well, if you talk about Dixon right now, stock is trading at 13,597, and we may see some kind of bounce back Stock is trading with strong support at 12,550. Even before stock took the support of the same, and afterward it went up to the level of 16,700 to 18,000 level. So from my side, it's a whole view with strict stop loss of 12,550. We may see some kind of bounce back from the present level.
All right, so that's the view on Dixon Tech. But let's take a look at the visuals that are flashing on your screen. Prime Minister Modi and President Draupadi Murmu meeting Russian President Vladimir Putin. Those are live visuals that you can see at the ceremonial welcome that the Russian president has received in India. And lots on the table, lots on the agenda, especially with respect to defense, energy, and all that we'll be watching out through the day as we move on and take you through the schedule of the Russian president who's visiting India for a period of 2 days. So yes, let's watch out for all of that. And I'll leave you with the visuals that you're tracking live from Delhi. All right, then, that's the latest we are getting on Prime Minister Modi and Putin's visit. But let's get back to all the queries then. And now this one is coming from Kiran, who's written to us from Pune. She also wants a 2 to 3 month opinion on Grow, a recent debutant on the D Street. She says that she's been holding a loss of about 12 to 15% in this stock. So she's obviously bought it at a higher level. Kunal, she wants to know, is it a good time to average?
Well, if you talk about Grow, right now Grow is trading at 144, 148, and the way stock has been trading on its daily chart, I think one should wait because high volatility is there in that. And this stock, after getting listed, stock went up to the level of 192, and even we also had witnessed sharp correction up to the level of 143. So one should give some ample time to neutralize this selling pressure, this volatility. So as of now, no need to hurry for this. No need to worry for any averages. Please wait for a time being.
All right, let's move on and let's take one more question. This is from Ayush, and Mr. Chokalingam, I'll come to you. He wants to add more in BEL at current valuation. That's his question. And also, what will be your view, a long-term view on ITC and ITC hotels?
Yeah, ITC hotel one can sell because, the valuation is stretched. There are many hotel stocks which are attractively valued. So I would prefer stock like EIH Limited or if your risk appetite is higher, Taj GVK. These are the two stocks I like most, purely based on the relative fundamentals. And ITC, I believe, constantly there will be hike in the cigarette tax duties on cigarettes and tobacco. Because for other consumer goods, the government has cut down GST rates by substantial manner, and therefore this would become a source of increasing the tax collections, which is under little stress now on year-on-year basis because of the tax reform. So I would sell ITC and prefer a stock like Britannia, which is likely to do much better in the second half because of robust crop output of wheat and also strong price weakness in the sugar. Both are key inputs. So that might be one ITC and ITC hotel.
All right, so that's the view on ITC and ITC hotels. Britannia looks like a better pick as far as now when compared to ITC. But
Welcome back. You're watching Buy Now, Sell Now from ET Now SBI Live Studio. And let's shift focus from viewer queries to management conversations and chat. And the company's focus is SKF India. After let's analyze their growth roadmap post demerger. And for that, we are joined by Mukund Vasudevan, President India and Southeast Asia, and Managing Director SKF India. Hi, morning, and welcome to the show. Many congratulations on the separate listing of your industrial arm. But firstly, just want to know what's the share of the revenue that was coming from this segment before the demerger, and what's the outlook post-separation? Any levels you're targeting for FY27 or 28 that you can talk about?
Thank you so much for the congratulatory message. This is a momentous occasion for us. In terms of what is the revenue, roughly it's around 53% of the revenues from industrial, 47% from automotive. And as far as outlook is concerned, we are looking at continued growth in the high single digits in the industrial business as we have been doing. And we are looking to deliver margins which are in the mid-teens. I would say that we may have in the next couple of years, because of the heavy investment we are doing for future growth in industrial, we may have a little bit of dip in margins over the next two years, but we hope to see the returns of that coming beyond that.
All right. Hi, Mr. Vasudevan. This is Kanishka also joining in. Let's, just talk about your margins a little bit in detail. Now, as per the latest statement, we saw the new midterm target of adjusted operating margin was nearly 17% for the medium term, and for the long term, it was 19%. It's substantially higher than the combined entities' recent margins of 10 to 13%. That's the range in the past 5 quarters or so. So could you give us, some details on specific drivers that are going to lead to this kind of a 4 to 7 percentage point jump in margins?
Absolutely. As I said, I think in the near term, we may have a margin in the same range of 12, 13, maybe 14%. After 3 years or in 2 years, we should start seeing that increase to the 17, 19%. The main reason for the jump will be one, additional focus, which we are bringing with the industrial business. The focus means we will have innovations tailored to customers. We'll have manufacturing, which is tailored to our industrial customers. And we'll have a more capital allocation done in a more efficient manner tailored to the industrial customers.
Right. Mr. Mukund, now within the industrials business, which sector do you expect to contribute the highest to growth? What's the pecking order here?
All of these, India, as you can see, is going through a massive phase of both infrastructure build out, urbanization, industrialization, manufacturing growth. All these are going to be drivers for our growth. But if you ask for pecking order, I would say our top few today are the heavy industry, which is metals, cement, and that would be number one. Then we have railways, then we have wind, then we have general machinery or all the other manufacturing. But there are also sunrise sectors like data centers, which require a lot of pumps, etc. And robotics, drones, etc., which are also emerging, and those are high growth. So across the board, wherever there is rotation, we have SKF Industrial.
All right, so that's about within industrials, the segment growth that you're looking at. But now let's talk about cost. Now, this industrial segment is incurring about 4,000 crore rupees in restructuring costs. That is between 2025 and 28, right? So take us through the financial benefits of this restructuring. Will it be phased, and what is the expected ROI timeline on these costs, specifically tied to the margin targets?
So the investments are, in the range of what we're planning to make is in the range of 800 to 950 crores over the next 3 years. A large portion of that is building a new state-of-art plant in Pune, which is tailored to the industrial markets. So as all the sectors we spoke about, which is railways, wind, manufacturing, renewables or wind, and so on. So that plant is going to be state-of-the-art, high automation, use of AI, ML, but it will be tailored specifically to serve the industrial market. So a large portion of that investment will go into that. In addition, we are developing our after-sales market through 2 aspects. One is our distribution network, which serves all the end customers, but also our service solutions, which is remote monitoring of these bearings, ensuring predictive failure analysis, ensuring reliability of various rotating assets so that we can predict when they will fail and not wait for them to fail. And that is a huge value add to our manufacturing base and increases their uptime. All this, we believe, along with our world-class products, which I think set the benchmark in terms of innovation, reliability, life, less friction, less noise, etc. I think will continue to drive our ability to extract a premium and also make sure that we can continuously improve our margins.
Let's also talk about your capex from 800 to 950 crore investment in this segment. This includes the new Pune manufacturing facility by 2028, as you mentioned earlier. Now, could you also give us a breakdown of this capital allocation by key growth sectors and the annual phasing of this expenditure between now and 2028?
I think a lot of the Pune facility should hopefully come up with all the required approvals by 2028. But we are accounting for some possible delays in approvals, etc. And so it's broadly split a third into the years. Part of that, around 70% of that is around the new plant. 30% is just normal capacity expansion. So as the demand grows, we have to expand capacity, more manufacturing lines, a larger footprint. So 30% will be capacity expansion. The remaining will be for the new plant, which will make us much more efficient and help us serve many more sectors, which previously we had to import these materials. We now will be able to serve through manufacturing in India. I would say that the reason we are doing this is because demand continues to grow in India. There's an increased need for local manufacturing to be competitive, but also to tailor our products for the local market. There's also obviously the need to do this from a statutory perspective as we are demerging the automotive and industrial entities.
All right. So, like you previously mentioned that you're also looking at selective M&A strategy. So, if you could tell us what are the kind of companies that you're targeting and how will these acquisition and also the capex that you mentioned earlier, how is all of this going to be funded?
So I'll answer your second part of the question. Most of the capex or a majority of the capex will be funded through the profits we are generating within SKF India Industrial. So we are a very high cash generating company, and we intend to utilize that cash to fund any of these investments. We also have a fairly good reserve of cash from our past earnings. So that's the first part, or the second part of your question. I think the other piece is we will also be looking at not just investing in the manufacturing facility. We will also be looking to invest in how we do remote monitoring of these bearings. So to me, this is also an equally important part. How do we remotely monitor? What kind of analytics do we need for monitoring these bearings, and what technology can we apply? So that leads to your first question around M&A. So there might be some M&A in that area, which is around remote sensing, analytics, which I think India offers a lot of opportunities in. In addition, if you think about SKF Industrial, we do not just bearings, we also do lubricants, we do various kinds of other rotating equipment, we do seals for bearings. So those are other areas we will continue to look for bolt-on acquisitions.
All right, Mr. Revan, thank you so much for joining in today and giving us all the details for this demerger. Thank you so much. And on that note, it's time for a short break on Buy Now, Sell Now as well. But then we have our both experts joined us. So you can also send across your stock-specific questions on the number that's flashing on the screen.
Hi there, welcome back to Eat Now. You're watching Buy Now, Sell Now right here live from the SBI Live Studios, and this is a show we are taking all your stock-specific queries with our experts. So let's get back to the queries then. And this one is coming from Venkatesh, who's written to us from Hyderabad. He has a query on two stocks. Deepak Nitrite, he has 80 shares at a price of 1900 rupees, and IREDA, 1100 shares at a price of 145. Kunal, he wants to know whether he can add more at the current levels, and also he is looking to keep them for a 1 to 2 years period. So we'll come to Mr. Chokalingam for that fundamental view as well. But what about the levels, Kunal? Do you think current levels are good to add Deepak Nitrite and IREDA?
Well, first let's talk on the Deepak Nitrite. Right now trading at 1557, and if you talk about fundamental prices at attractive level, quality is good, even management is good. So nothing to worry about this counter. Please hold this counter. But yeah, from my side, it's like a waiting watch at present level. No need to add at present level, because further downside would be there up to the level of 1500 to 1480. Now there, now exactly there where we may see some kind of strong support for the debug nitride. So not at present level, but if stock approaches 1500, then it would become a good buying opportunity. So average. And if you talk about EDA, right now stock is trading somewhere around 133. Stock has recently given a breakdown of its 139, where we saw some strong support. So further downside would be there, further pain would be there up to the level of 120. And if stock come to this level, then only it would become a good buying opportunities for any averages. So hold for this ADA. If it approaches 120, then it would become a good buying opportunities.
All right, so that's a take on data. But then Chokalingam sir, this is a question from Arjun, Kolkata. And he wants to know if it's the right time to invest in Vedanta and Hindustan Zinc for the period of 7 to 8 months. And what are the crucial range? And they both are in the similar price range right now. What should be the weightage in the counters?
I can give only research view. So I would give a research view that one can consider buy Hindustan Zinc. I would sell Vedanta at this price for two reasons. It has already rallied a lot and valuation is stretched. Whereas Hindustan Zinc looks still quite attractive because of silver segment. And silver price still remain quite strong. And companies also planning to expand the capacities in both verticals in the medium to long term. So my view is buy on Hindustan Zinc and sell Vedanta.
So that's the view on Hindustan Zinc in focus on the back of rising metal prices, precious metal prices. But let's move on to the next query. This is coming. They have KR Balan writing from Mumbai. They're a senior citizen. They want to sell Jamuna Auto. They are sitting with a profit of about 15%. Bajaj Housing Finance, they have 20% loss over there. And Hunasa Consumer, again, 20% loss is what have. Kunal, what do you suggest? What should they do with all of these counters? Jamuna Auto, Bajaj Housing Finance and Hunasa Consumer.
Well, let's talk about Jamuna Auto first. Right now, Jamuna Auto is trading at 121, and the way stock has been trading on its daily chart. Further upside momentum would be there up to the level of 140 to 150. Nothing to worry about this counter. Please hold this counter. Pretty upside momentum would be there. Now, if you talk about Bajaj Housing Finance, after getting the listed on the NSE, we have been like continuously witnessing some selling pressure in this counter. Right now, stock is trading at 96, and nothing to worry about this counter. Fundamentally strong. We have been witnessing this selling pressure because of recently promoter stake sale. And if you talk about long-term perspective, long-term story is pretty well for this counter. We may see some good upside momentum in this counter up to the level of 120, and if stock break this level, then 137 would be there. Now, from my side, please add this Bajaj Finance on every dip if we see any further correction from the present levels. Fundamental is very strong for this counter. And if we talk about Honasa Consumer, right now the stock is trading at 274. Downside strong support comes at 265. Please hold the stock with strict stop loss of 265. Further upside momentum would be there up to the level of 310 to 330.
So that's the technical view on all of these counters. But Mr. Chokalingam, let me come to you. What do you make of these counters, Honasa Consumer, Jamuna Auto and Bajaj Housing Finance on the fundamental side?
Bajaj Housing is trading at 4 times price to book value. I would not give buy call, but then definitely for long term one can hold it. One has to pay the price only in terms of waiting period, but otherwise it's a great company from the great management. Jamuna Auto, Honasa, I looked at it, both valuations are stretched, and I believe small and mid cap would continue to have a lot of pain for at least 1 to 4 months. So it is better to sell them and put the money in very strong large cap stocks like L&T or Infosys.
All right, Kunal, this is a question from Shanmuga Sundaram. He's a senior citizen from Coimbatore and he wants to know about Gillette India. He's got 20 shares at 8500 and his time horizon is almost of 6 months to 1 year. How is it looking on the chart basis his buying price?
Well, right now stock is trading at 8,377. He has a position at 8,550. Now, fundamental is pretty well for this counter, and strong support comes at 8,171. Earlier, stock took the support of the same, and afterward, it went up to the level of 11,000. So, same replicate momentum we can expect in this counter. Please hold this counter at present level with strict stop loss of 8,150. At present level, we can expect somewhere around 8,950, and if stock sustain above this level, then handsome momentum would be there up to the level of 9,800. So yeah, this stock looks very attractive at present level for an upside momentum up to the level of 9,800.
So those are the levels for Gillette India. But let's move on and answer the next query. Now this one is coming. The viewer hasn't given their name, so we won't be able to take this one. But another query here. Okay, so let's take this one. He's a long-term investor. Tata Motors, 200 shares. Their average price is 475 rupees. And iRadar, 7,000 shares. And Vodafone Idea, I suppose, is what they meant. 7,000 shares at a price of 13.5 rupees. It's a new acquisition. Eternal, 1,300 shares at 234. He wants to know how are the fundamentals looking like, Mr. Chokalingam. Tata Motors, average price is 475. Vodafone Idea, average price is 13.5 rupees, whereas Eternal, 234 is their buying price. So what would you suggest? Are the companies strong enough to hold for a long-term horizon?
Eternal, yes, at this price for long term, one can hold. Now is part of index also. Passive funds can continue to come. And as far as Tata Motor is concerned, between the two companies, I would prefer Tata Motor commercial vehicles because directly it's a play on the domestic demand, which is very strong, no uncertainties, unlike it's a global business through Tata Motor passenger vehicle company. So I prefer Tata Motor CV. And also its venture in finance, Tata Capital, that is also a play on domestic demand. So therefore, Tata Motor CV is the most preferred. And as far as Vodafone is concerned, the fundamental message is very clear. I mean, nobody can justify on the fundamental basis holding Vodafone. But then there is a chance of going wrong purely based on the fundamental giving sell call. Therefore, only the highly risk-taking investors can hold to Vodafone because if a lender or government or all equity stakeholder make any big sacrifice in terms of writing off either debt or dues or equity capital, then the stock can do phenomenally well. That as an analyst, I cannot predict whether they would be willing to sacrifice. It is quite possible. Otherwise, the company would find it very difficult to survive. So one of these three stakeholders, lender, government, and the equity stakeholder, if they decide, then this can give a phenomenal return. Otherwise, so therefore, extremely risk-taking investors can continue to hold or even buy. Otherwise, fundamentally, it's a sell.
All right, on that note, it's a wrap on Buy Now, Sell Now also. Thank you so much, both of you, for being on the show and helping our viewers formulate their stock-specific strategies today. Thank you. And we end the show on a somber note as Simone Tata, often referred to as the cosmetic of India, passed away earlier this morning in Mumbai. She was known as the pioneer who started India's first beauty brand Lakme and went on to play a pivotal role in the foundation of Trend. She is survived by Noel Tata, chairman of Tata Trust.
All right, then, with that, we're completely timed out on this edition of Buy Now, Sell Now. We'll take your leave, but don't go anywhere. Markets at noon coming up next.